Having confluences when you open a trade is like having cats in your house. The more you have, the better your day. So it's obvious why I'm talking about cats, but what about these confluences and how they can help us in order to get more clear entries and really nice trades? So today I would like to share with you a really great strategy that I am currently backtesting. It is basically using market structure, price action, but we are also looking for confluences with the 50 EMA and different level of Fibonacci retracement. So first of all, I would like you to see right here are the levels that I am using on Fibonacci. The other ones were just deleted in order for me to have this clear image of these levels. So as we can see here, we have a really nice instance here that the price were going nice to the upside. And after some period, we can see here that there is a retracement. And actually, I would really like to see the price retouching this level of 0.618, where we have a really nice confluence with the 50 EMA. And also, here is quite an intermediary, but important level right here. So actually for this trade we would have 3 confluences, which is a really great trade, and it has a really nice probability to be a winning one. So when I see this retracement, I am going to place a pending buy on this level. All right. And the stop loss, I am actually putting this stop loss somewhere near and actually below the 0.786 level when it's the case. And when we have the case of the price just retouching the 0.382 level, I'm going to explain you this on the later examples. All right, so let's see how the price will react on this level. And actually, we are now triggered in this position by this impulsive candle, but we are not so scared in this moment because we have here this really nice confluence that might be really useful for our trade. For the trade take profit, having in view the fact that this was a retracement, the next important target zone would be actually the next zone that might be hit in this uptrend. So I am going to just switch to the 1 hour time frame maybe and see which are the important levels right here. And actually I don't really like how the price was rejected twice in this level, so I am going to target now only the upper base of this Fibonacci retracement, which would be actually a 2.5 to 1 trade. So let's see how the price reacts. And actually in one candle we just hit our target of 2.5%. all right, let's just now scroll to the next important. Oh my god, this should be a longer trade, but I told you I was really afraid about that level there. All right, let's see now some more examples. So as we can see here, the price was again going really nice to the upside. We have a huge impulse. Oops, I'm sorry. I will just drag my fib retracement right here. And let's see if we'll get any nice confluences. I never take trades if the price only pierces a fib level, but I don't have at least a confluence with a level. So if the price will hit only this level here, I will not take any trades, but I would be really interested to take a long position if the price will go back to 0.618 level, because this might be a really nice confluence with the previous high level. But let's see what will happen next. Actually, the impulse is still to the upside and it's huge. So we are going to drag our Fibonacci until we have a clear nice retracement. All right. I think here, no, we have no confluences here. So we are going to just wait for the market to have again a really nice impulse in a direction, because right now I am no more interested in any trades in this zone, because as we can see here, the price is ranging right here, and I wouldn't like to be involved in any trade. So let's see which will be the impulse. All right, I can see here that the price starts to go to the upside, so I'm going to just draw another Fibonacci retracement right here. Okay, and if the price will go back to the 0.382 level, I would put a buy pending in order to be triggered, because we have here a confluence with this level right here. All right, so let's see what will happen next. Okay, the price is quite rangy, but now let's see what we have here. Let me drag the Fibonacci. All right, so the price is going now to the downside, and it's almost touched the 50 EMA, which is the most nice confluence here, but actually we would not be triggered, because our entry would be somewhere on the Fibonacci and not higher. So we are not involved in this trade, but it will be a really nice one. All right, we have another nice impulse to the upside right here. Let's see what we have. Okay, so actually the price started to go to the upside, starting with this level here. But for the moment, we have no confluences. And don't worry if you have, I don't know, just a few entries, because it's better to have a lower number of entries, but with a higher probability to be a winner one, because otherwise you would just overtrade and search for trades and maybe lose a lot of them. So try to keep it simple and try to enter trades when you have really nice confluences. All right, so actually here on the 618 level, we would have a really nice confluence, because here we've got this this high level created prior being just broken by this this level here. All right, so we would have again a really nice long position somewhere on the 618 fib, and again the stop loss would be now a few points below the next fib level. And let's see how this looks on the 1 hour time frame, and if we may target an important level. All right, as we can see here, we actually have a marked level right here, and it's actually the closing, actually the week of the previous candle. So we are again going to target only the move again to the final base of our Fibonacci retracement. And actually it's another 2.5 to 1 trade, and the target was easily hit in like three candles. All right, so another winning. And I think I will give you one more example here, and I will call it a video, because I wouldn't like to bore you a lot with this strategy. But actually I'm going to come again in a few days in order to show you some backtesting results of this strategy. Okay, so let's see what we have here. The previous high was broken. I am going to just drag here a new Fibonacci retracement, and actually if the price is going to hit this level right here, I'm going to place a trade, because again we have a confluence with at least 2 instances. First of all, the 382 level of the Fibonacci, and Secondly, we have this level right here, this previous high. But actually the price is going higher and higher, and our fibs are changing. The impulse is really nice to the upside. And actually now if the price will go back to this level, we will have a confluence with the 0.618 fib level. But actually we can see here that the price will never go back to our level. But no rush. All right, we have a impulsive retracement, but actually on the 0.618 level, we wouldn't have any confluence with any structure level. So I am going to just skip the moment when the price will hit this level. But actually now I would be interested to take a trade here, because we would have another kind of confluence here. And it's about the confluence between the 618 level and the 50 EMA. So I am going to place the pending buy somewhere on the 50 EMA. And here, we are not going to just drag so much the stop loss because it would be huge. And actually, if the price will break this level here, and also will break the 50 EMA impulsively, it will be a trend shift. So we just don't need to have such a huge stop loss, because it wouldn't save us from the trend shift. So I am going to just place the stop loss somewhere around here in order to cover some of this week of the previous high. And for the target, I am going to target somewhere near around this zone. Actually, what you see here, these orange lines, are really great in the free tool in TradingView, which is drawing to you support and the resistances lines. And actually, I'm setting here only the 4 hours support and the resistances, not the chart ones, because I really like to see the important support and resistance zones. All right, let's see if we ever get triggered in this level. I can see that the price is still rejecting that level here, and for the moment I will just delete this pending order, because as I told you in the previous example, I do not really like this kind of messy price action ranges. So even if the price will go higher after hitting a fib level or the 50 EMA, I'm not interested anymore in any trade here, because it takes too long for the price to go higher. So we can see here that it may be a problem for the price to just break that high. And as we can see here, there might be a trend shift here. And actually, let me see if here I think we would have a confluence with the 0.3 Fibonacci. And yeah, actually this is a kind of more aggressive retouch, but it really counts. So we would have for sure pending sale right here, because as we can see, the price is already below the 50 EMA, and I just draw the fib starting with the point when this downtrend started. Okay, and the stop loss will be somewhere near the next fib level, and I am going to target only the base of this box created here, because as I told you previously, I wouldn't be involved in a buy in this zone, but I am actually not really I'm not actually really trusting any sales, although in this zone, because we are still in this box here. So I'm going to target only the base of the box, and actually the 221 was hit. All right, and as I told you, there may be still a ranging market. So for the moment, let me just write this here, because we've got a 2.5% trade, another 2.5, and another 2% trade right here. So in only 3 trades, we've got 7% gain on account. And this happened, I think, only in 1 day or 2. Yeah, I think there were actually 2 days. But this is a really nice strategy. As I told you, I'm going to backtest it more and maybe refine it in some ways. And I'm going to come back with some backtesting results soon. All right. Thank you all for watching. If you like this video and find it useful, please don't forget to like and subscribe. And see you in our next video. And of course, until then, trade safe and trust the process.